There are 4 charts that genuinely scare me about the world economy, and they should scare you too. First up, developed markets are starting to look like emerging markets. They're drowning in massive piles of debt, and the volatility gap with emerging markets is basically gone. When fundamentals deteriorate so much that DMs start acting like EMs, it's a warning sign. Second, the labor market might be cracking. The labor market differential, which is the difference in perception of jobs as plentiful versus hard to find, has been dropping. That means, in short, people feel jobs are getting harder to find. This chart looks a little bit familiar to how it did in past recessions, so I don't know, I'm kind of worried. Third, bonds are looking better than stocks. The excess Cape-Shiller earnings yield has been a solid indicator of subsequent 10-year returns in stocks. It's currently at levels that suggest the S&P 500 will return just 1.6% annualized over a decade. 10-year treasury bonds have a 4% return. What the hell? And fourth, serious auto loan delinquencies are rising. The effect of higher rates is creeping in, and people are finding it harder to pay their debt. Currently, these levels are near that of the 2008 financial crisis. The consumer is getting weaker. You're probably thinking this is all US data, right? So why should I care? Because it's the world's biggest economy. Whatever happens there impacts interest rates, and that ripples across the globe because central banks generally follow the Federal Reserve. Have you been seeing signs that worry you about the economy too? Let's talk in the comments.